Have you ever noticed something really strange? A new technology shows up, and suddenly the entire money world gets pulled into one place. People talk about it everywhere. The news talks about it, your friends talk about it, social media talks about it. And inside your head, a dangerous question appears. If I don't jump in, am I going to miss the biggest opportunity of my life? That's the feeling I'm getting with AI. I've been investing for a long time, and for most of that time, I believed in one simple strategy: invest for the long run in the broad market, basically through index funds. The reason is simple. You don't need to be smarter than everyone else. You just need to be more patient than the crowd. You buy the whole marketplace instead of trying to guess which one stall will win. And I still believe that strategy works. But I also have to be honest. AI is making me change a few things about how I manage my money. Not because I hate AI, not because I think AI will die, but because every time a huge new technology appears, the market tends to follow the same emotional pattern. First hope, then excitement, and then illusion. So in this video, I'm going to share 5 changes I'm making in the AI era. The goal isn't to scare you. The goal is to help you not get swept away, because most people don't lose money in the market because they're poor. They lose because their emotions take the wheel. Change number 1. I no longer blindly trust a portfolio that's too concentrated. Here's something many beginners don't notice. There are periods when the market index looks like it's rising steadily, but most of that growth is actually coming from a very small group of stocks. It's like a sports team where only 2 or 3 players score every point. If those 2 or 3 players get injured, the whole team freezes. In the AI era, this gets even easier to happen because AI creates a big story, and big stories pull money toward big names. The more people buy the leaders, the higher those prices go. The higher the prices go, the bigger their share becomes inside the index. And the bigger their share becomes, the more index investors automatically pour money into them. It becomes a self-pushing loop. It sounds great, but it comes with a risk. If future expectations get inflated too far, even a small disappointment can cause a big drop. Not because the company is bad, but because the expectations flew too high. So what am I doing? I'm not abandoning index investing. I'm just stopping the blind belief that one fund and I never have to think again. I'm starting to ask, am I accidentally putting too much money into the same story? If you're a beginner, you don't need to make this complicated. Just remember this: don't let your entire future depend on one trend. Change number 2. I'm going wider, beyond just one country. A common mistake is thinking, this market is the strongest, so I should focus only on this market. But financial history loves to surprise people. There were times when everyone believed one country would dominate forever, and then everything shifted. One thing I've learned is that the world changes faster than we think. Technology, politics, energy, supply chains, trade tensions, any of these can flip a country's advantage. So, instead of betting everything on one market, I like the idea of betting on the world. Not because I think country A is about to fail, but because I want to reduce the risk of being wrong in a way that ruins me. In simple terms, if you can own the whole map, why only pick one corner? Change number 3. I'm changing how I think about AI investing. This part is important, and I think it'll be useful. When a technology explodes, most people rush to buy the companies on the stage, the ones in headlines, the ones called the future. But sometimes the most consistent money is made by the people behind the stage. Think about the gold rush. People ran to dig for gold, but who often got rich more consistently? The people who sold shovels, sold food, sold supplies, and ran the banks in town. AI may be similar. There's a group of companies that don't need to win the AI war. They just need to use AI to cut costs, raise revenue, work faster, and serve customers better. These companies might get less hype, but they have something valuable. AI creates real profit in real life. So if you only chase hot AI, you might miss useful AI. If you're new, remember this: big technology doesn't only create heroes, it creates an entire ecosystem, and sometimes the ecosystem is safer than the hero. Change number 4. I treat cash like a mental life jacket, not something to be ashamed of. A lot of beginners get obsessed with one idea. Cash is wasted. Every dollar should be invested. That sounds logical, but it's a huge psychological trap. Because when the market drops, what happens to someone with no cash buffer? They panic, they sell, and then they turn a temporary drop into a real loss. Here's the line I want you to remember. Cash won't make you rich fast, but it stops you from doing something stupid when you're scared. In the AI era, volatility can be bigger. Expectations change fast, news moves fast, crowd emotions explode fast. You don't need an extreme amount of cash, but you do need enough so you're not forced to sell at the worst time. I call that the right to stay calm. When you have a cash buffer, you stop seeing red charts like the end of the world. You see them as a bad day, and you make better decisions. Change number 5. I'm rewriting my personal rules so AI and headlines don't control my mind. The most dangerous thing right now isn't what AI is doing to the market, it's what AI is doing to your attention. Social media algorithms are designed to keep you watching. Clickbait news is designed to trigger emotion. Videos predicting crashes, explosions, get rich fast, they're built to keep you scrolling. And if you're new to investing, it's easy to get pulled into a loop like this. You see scary news, you feel fear. You check your account, you see red, your heart races, you feel like you must do something now, and you sell right at the bottom. That's panic selling, and it destroys beginner portfolios faster than almost any bad stock. So what do? I use a simple system. 1. I limit my news time, not avoiding information, just avoiding emotional overdose. 2. I use the 48-hour rule. If I feel the urge to sell because I'm scared, I wait 48 hours. No big decisions while my body is in panic mode. 3. I write one sentence and repeat it whenever the market is red. This is normal in long-term investing. Just one sentence, but it pulls me out of survival mode. 4. I invest automatically on a consistent schedule, so I'm not arguing with myself every month. The more decisions you force yourself to make, the more chances you have to make the wrong one. And now I want to say the most important thing in this whole video. AI does not make long-term investing useless. AI just makes the psychological traps stronger. It makes news move faster, prices move faster, and crowd emotion explode faster. If you're new and you don't have a system, you'll get swept away. But if you have a system, you actually have an advantage because you can do what most people can't. Stay calm. So if you're still listening, ask yourself one simple question. If the market dropped 20 to 30%, what would you do? Would you panic and sell? Or would you still be okay because you have a buffer, you have a plan, and you don't need to touch your investments in the short term? That's the difference between an investor and someone the market controls. So to wrap it up, the 5 changes I'm making in the AI era are these. I'm reducing the risk of being too concentrated in a small group of stocks. I'm going wider by looking globally. I'm looking for opportunity in the AI users, not just the AI builders. I treat cash like a life jacket, so I'm never forced to sell. And I'm building a simple mental system so headlines don't control my decisions. I'm not saying you need to copy me exactly, but if you're a beginner, you have some savings, you want to invest, and you're scared of messing up, even doing one thing will already put you ahead of most people. Don't panic. If you want, tell me in the comments what scares you most about starting: losing money, buying the wrong thing, or the fear that the market will crash right after you invest. And if you want me to make a follow-up video about whether AI is creating a bubble, explained simply, step by step, with a real action plan, I'll do that next, because AI might change the market, but you can still control something even more important: how you respond.